Good evening and welcome to the FITT Show, financial information for today and tomorrow. I'm Bobby P. Kinzer.
And I'm Thomas Doty.
And yes, we are the FITT Show, helping people get their finances in shape. It's February the 13th, 2025, and we'd like to welcome people around the country and around the world. So glad to have everybody here today. How you doing? How you doing?
Happy to be alive, my brother.
That's a good thing. Being alive is a very good thing. And I'm so glad you are that I can be on this show with you. Just want to give our first disclaimer. We're not financial advisors. We're not stockbrokers. We are financial educators and hoping we provide you the information that you can use. We advise you if you want specific information about individual portfolios that you do seek advice from a qualified financial advisor. So just keep that in mind. We're here every Thursday at 8 p.m. Just a couple of housekeeping things. We'd like for you to continue to click on the like button. That's how we reach more people. And click on the heart button. That's so important. And to make this show interactive, we are in a virtual studio, but to make it interactive, use the comment box. If there's any comments you have, opinions or questions you have about what we're talking about, a particular topic, please feel free to put it in the comment box. And the more comments you put in that box, by the way, it reaches exponentially more people than just clicking on the like button. So we like when you put comments in there, but just don't put comments if it's any kind of show that you would like for us to cover, anybody you'd like for us to bring on the show, which we plan to be doing in the near future here, please put it in the comment box. We really, 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 really appreciate that. Dope.
Yes, sir.
What's going on in your life?
Nothing. I'm always compelled to talk about these scams because I just don't want to see anybody that listens to us get scammed because they're getting better and better. I was reading about one that a lady got a call from a bank, and it actually said Wells Fargo Bank on her phone. And she was a little leery about it, so she asked them to confirm. They told her her birthday and the last 4 digits of her social security number.
Yeah, they do that nowadays.
That kind of set her at ease. So not only did it say Wells Fargo, but they knew information about her. But that information is available on the dark web. So please understand, somebody, even if they call you from your bank, it's probably a scam. Simply hang up and call the bank back from a verified number. Make sure you do that, because nobody from a bank's going to ask you for your passwords, your PINs, your username. So just be aware that with these spoofing, they can make it say the phone calls from a legitimate place. And so just be aware of it. If you're selling something on Facebook, be leery of it. Watch out for vacation packages. Watch out for employment scams. And please realize that these people are really good at what they do. And so much information has been compromised that they have your social security number. They have your birthday. They have every place you've probably ever lived, because so much of that, number one, is either public information, or two, it's available for sale from some data leak on the dark web. So if somebody calls you from your bank and they're going to try to hurry you and rush you and get you not thinking, because the lady I was telling you about, her bank actually sent her an email questioning the transfer that she was trying to do, but there was 2 people involved, and the one person kept her distracted on the phone, so she didn't check her inbox. So please be aware. Let's hope nobody that listens to our show ever gets scammed, because when you hear something that sounds a little fishy, you're going to hang up and you're going to call that number on the back of your credit card or debit card or on your bank statement. And the other thing I want to mention is writing checks. We talked about this before, how they can wash checks and change the pay to and change the amount. If you can avoid writing the check, avoid it, because they are vulnerable unless your bank is using, I'll call them wash-proof checks. They can make checks now with little holograms on it, which would be hard to replicate. And a lot of them use an ink that's chemical sensitive, and so if somebody try to wash it, it'll mess the check up. So if you have to write a check, make sure your check's wash-proof. But if you can avoid writing a check, avoid writing a check. So just want to get that out there.
One more public service announcement, Dope. There's a lot going on right now. People having to make decisions about, do they take a buyout? Do they take certain packages? Please beware. Do your due diligence. Make sure you research and know. And like we always say, have a financial plan. Just don't have somebody else have you in their plan. You just make sure that what they offered is in your plan. And as we always say, though, as accountants, trust but verify. If people is offering you anything, you make sure you have it in writing, and make sure all your financial documents are intact. And I like to submit to you that you should make copies of all your financial documents, and especially if you retired, you should make sure you have a copy of your Social Security document, and take a copy of your last of your 401k portfolios. You need to document that phase, because a lot of crazy stuff is happening. People are entering into systems. We don't know what's going on. So the best way to protect yourself is to document a lot of those things. Just want to give that public service announcement. A lot of people in an uproar. What should I do? I don't know what to do. I'm paralyzed because the main thing with me and Dope says that beats all of that, have a plan. And just make sure, you following your plan. Don't let nobody make you do something that, you think you have to rush. Just want to get that public service announcement, because lots going on, especially with people's finances. So with that, Dope, as we always do, the top of the show, which is one of the people's favorite, is how is the stock market doing? Because that's a lot of 413, 43B, and 41. Now let's hope it works today, though. We've been having technical difficulties the past years.
Yeah,
it's working.
And the market has been really, really crazy. A lot of it is driven by the election and some of the things.
Excuse me, Dope, before you go, because I can't see. Can you see that?
Hold on. Yes, there.
Thank you. Sorry. Go ahead. Continue. I'm sorry.
And so there's been a lot of movement in the market because of what's going on with the new president, and some of the things he's doing is really driving the market, sometimes up, sometimes down. But we're looking at, this is really my little portfolio of stocks that I own. And if you look year to date, the far right corner, you can see the S&P is up 5%. So far, Nasdaq's up 3%. Now, the stocks that I dabble with, Microsoft, it went down a little bit this week. It was down 5 points this week. And that goes back to their earnings announcement and some of the things they have going on. Apple's up a bunch, starting to get a little bit more kick there. You can see it's still down year to date, but last week it was up considerably, up 9 points. NVIDIA is continuing to do okay. It's up 6 points, and it kind of went down a little bit, got down into the 120s. Then we have Google, which is down because of their earning announcement and how much money they're spending on AI, kind of spooked the analysts a little bit. Year to date, it's still about flat. It was a 190 at the end of the year, 188 now. Pfizer's down a point year to date, hadn't changed in the last week. Again, that's the one I hold because it pays a decent dividend. And my one star is Palantir. It's up 7 points this week. It's up 55% this year already. This is when I got in at 70, and now it's at 118. So I'm up like 48 points on that one. And so a couple of things I want to mention. This is why you diversify. You have, so some things go up at different rates. Sometimes something goes up, something's going down. And but you can see the broad market is up 5%. So if you're not interested in buying individual stocks, that's why you would invest into an S&P index fund. And if you were in an S&P index fund, you'd be up 5% so far this year, which really isn't that bad. So all in all, the market's going to continue to be volatile. This is when you really have to have a strong constitution to be invested, because there's going to be a lot of ups and downs as some of these go on, like tariffs and what's going on in the Middle East, what's going on in Ukraine. So you just kind of have to be tough, hang in, and hopefully things will settle out, because a lot of the earnings reports have been positive. So the economy is still strong. Looks like inflation is still trying to hang around. So that's kind of been a little drag on.
It went up though the other day. It went up to 3%.
Yeah, that's what I mean. It's still being a drag on the market, and that's really affecting some of the tech areas, which are interest rate dependent and price dependent. So we'll see if we get that under control. I'm not sure the Fed will be dropping interest rates anytime soon until they are firmly sure that inflation is under control. And right now, it's not. So that's where we are. Hope you are having some good luck. I had a good week with some of my stocks being up. A couple of them are down, but overall, I'm doing okay.
Wow, that's good news. Hey, Dope, what do you remember? What NVIDIA stock split? What did they split to per share?
It split 10 for 1. You say when?
No. How much was the split when they?
It was 10 for 1. If you had one share.
No, got that. But can you tell me what that became when they did the split? Was it like $120 a share when they split?
I can't remember.
I think it was. I think it was. That's why I was asking you, because it split at 120. I think because it would have. Didn't you have about?
My bill was at. It was at way more than that. Okay, it was 10 times that. Okay.
Yeah. I'm just saying
1,200 or something. Yeah.
Yeah, and it split at 120 per share.
It split to 120 a share. So it was at 1,200. You divide it by 10, you get 120. Yeah.
Right. That's right. And I think it was at 1,200. So I mean, because a lot of people got in at 120.
Yeah.
I'm one of them.
I got in at 17.
Yeah. Ooh, yeah. And before it split 17.
Well, no, the split price, the split adjusted price. I got in at 170.
Oh, wait a minute. Yeah. You got in at how much?
At 17.
And it went to 1,200.
No. I got in at 17 and it went to 120. Okay.
No, though. You had it before it split.
No, and that's what I'm saying. My split price.
Yes, got you. Yeah.
Was 17.
But I'm saying, but you.
It was 170 when I got in.
Oh.
Okay.
And it went to 1,200.
There you go.
Wow.
Yeah, I did okay on that one.
What a hell. Yeah, I'm sure.
I did good on that one.
Hell of a return.
Oh yeah. That cures a lot of ills, believe me. and I'm hoping Palantir does the same thing. Again, I got in that one at 70 and it's up to 118. So I'm not quite double yet, but I'm almost doubled my money on that.
So forgive me because I'm getting old. Can you just tell us again what Palantir
is? It's another AI firm that the federal government looks like they're going to be using it as one of their AI staples. And that's really what they do. So hopefully, and the thing about it, this one's overvalued. If you look at a lot of the analyst report, they say the price should be around 90 to 100. And right now it's up to 118. So it's really trading on anticipation of what's going to happen in the future. But it's one I'm taking a chance on. Because again, I'm sitting on so much capital gains that I can take a chance. And if it doesn't work, I can just use that to offset my gain. So I'm not looking to throw money away, but I can still swing for the fences on a couple of stocks, which is what I'm doing for this one, is swinging for the fence. And if it hits, I'll be happy. If it don't hit, I won't be real mad because I'll just use that loss to offset some gains. And I want to mention, I took out I did a few transactions. I sold the HP and I sold the Brady just wasn't happy with what's going on with those two stocks, with their earnings, where they're going. So I got out of both of those. When Google had their big drop, I think it got down like 180 or something like that. I bought another hunk of Google, and so that's kind of where I'm at right now.
Yeah, and just want to remind people once again, these are just stocks that are in Doty's portfolio, and we only using them as examples of what the stock market can do, and we're not suggesting that you or promoting that you purchase these stocks. But what you can see over the time that we've been on this show, they have been making money, but we're not pushing these stocks in particular. But the point is, these stocks have been making money, and our show today is hurdles to investing. And
hey, let me say one more thing. Again, this is money that I play with. The bulk of my money is professionally managed. So this isn't money I need to live on or money that I'm saving for retirement. This is money that I don't want to use the term play with, because that's not the case. But it's money that I invest myself based on my own research. But the bulk of my money is managed by an advisor at Fidelity. So yeah, to your point, Bob, don't say, oh, I'm going to do, Doty look like he's doing well, I'm going to try to do what he does. No, this is right. This isn't money I'm playing with, but it's money I'm taking chances with, because the other part is taken care of.
Now, some people would say, because I've had people come to me, though, saying, well, that's dope, that doesn't pertain to me, because dope is a CPA, an MBA, and, executive of Fortune 500 company. He knew how to do this. No. We're going to talk today further about this. You don't have to be no rocket scientist. You just have to have some knowledge, and you have to be willing to take some risk, and you're going to be happy to just take action. So,
and a willingness to work, do a little work.
That's what I was trying to get to, though. Thank you. And the willingness to do a lot of work and we're going to get into that today, because it's very important, because a lot of people think you need a lot of money, you need a lot of knowledge, and it is not. The markets, it's all about companies that are selling products, and they want to do good. So, and if you pick some of them products that are trying to do good, all of them are trying to, make a way. So just stick with us today. We're going to have a great show about that. Just want to mention the commodity market. Gold is up around $2,900, $2,900. I got in at $1,300 an ounce. So you do the math. That's over 100%, 115% return. And believe it or not, silver is starting to go up. And these are usually kind of inflation fighters anyway, right? To play the game, when the inflation goes up, commodities tend to outperform other securities of investment, and silver is up to $32 an ounce, and I got in at $16 an ounce. So I'm doing pretty well with the gold and silver, though.
Hey Bob, that gold fund that I got into last year at income tax time, I'm up 33% on that gold fund in less than 1 year. It'll be 1 year, April 15th, because that's when I moved it into the Roth. But I'm up 33% in that gold fund in 1 year. And we say that because it could plunge tomorrow. It could plunge, but right now it's doing okay. This year's Roth, I'm going to put into either some type of crypto.
Oh boy.
Yeah, I'm gonna put it in. I'm gonna put 15 grand in some kind of crypto.
Ooh, boy.
That's 16 grand. That's
you're a risk taker, though. God,
well, yeah, you gotta take a little bit of risk,
That's a lot of bit of risk. I wouldn't call that a little bit of risk.
Chump change.
Listen to Doge. I know y'all laughing. Put some comments in there. I know y'all got a reply to that. Though, let's talk about cryptocurrency, since you brought it up. The market is It's up only about 2%. It's about $53 billion up. But the Bitcoin is down, though. It had gotten up to $105,000 a couple of weeks
It
ago.
was up to 105?
Yes, it was
Dang.
up to 105.
Like 10% down.
Yeah, man. Yeah, look at that now.
Time to get in.
Time to get in.
Everybody's pushing it. Everybody's pushing it. Our federal government's everybody's on the Bitcoin bandwagon or crypto bandwagon.
So especially the Bitcoin. Ethereum is the number 2, still at number 2, but it's down $30. And Ripple, you always laugh when I say that, though. You're so old school.
I had some experience with Ripple.
Bourgeois Ripple. XRP was at 4th spot. Now it moved back up to the 3rd spot. It's only up 23 cents, but that's 10%. So Ripple was down to the 4th. And Tether, the stable coin, which is pegged to US dollar, so they say. Sometimes it's just assets, but it's still staying at about $1. Solana actually had moved down. It was at number 5, but it's up $3, although it moved down. And the Dogecoin, Elon Musk, is only up 1 cent. That's approximately 4%. So that's the crypto market. It's still, like we say, it's a long play. It's very speculative, and don't get it unless you can afford to lose the money. That sounds crazy, but that's just how it works. If you don't be putting your rent, your mortgage, your car note money into it. Am I right about that, though?
For junior's college money, exactly. It's got to be money that you got to be able to tolerate a large decrease, because it could drop 20% tomorrow. It truly could.
Right. And the myth is for you young people to think you can put in $20 and it's going to grow to $1 million. That's a myth.
You say stop that foolishness.
Stop that daggone foolishness. So, last week we talked about creating a financial safety net. We hope that was helpful to you all. Very important information. But we got this is a very hot topic, true and near to my heart, because people have the wrong idea about investing. Especially the name of the show today is Hurdles to Investing.
Yeah, and I think most people know that investing can grow their money and build wealth, and they think it's good. And they kind of sit and look at it from afar and say, yeah, I should be doing that. I'm going to do that. And for some reason, they never do it. Well, today we're going to talk about some psychological barriers that keep people from making that first move with confidence. And a lot of times it's education, it's their family history, it's their experiences with money, it's their risk aversion that keeps them from making that move. And that's what we're going to talk about, some of the hurdles that keep people from investing. And hopefully we'll give you some ways to get over those hurdles and make that move and increase your overall wealth.
I mean, there's just a lot of misinformation out there. And for some reason, we as Black people don't, really get the full benefits of investing. But one thing, though, we've learned a lot over the years, and we've seen, breakthroughs in the world of finance. And it's, the lessons are clear. Investing in the markets is an excellent plan for making long-term goals, like maximizing your retirement, or also being able to develop a deeper understanding about investing so that you can cultivate or increase your sense and optimism about investing. That's the key, getting as much information as you can. But even though the investment principles we discuss, we know they are simple and they're not always easy to understand and accept, although they really are simple. But many people struggle with some of the basic concepts behind long-term diversified investing. But when it comes down to you all, and we understand, it's a lot of human nature. But the following discussion today, we're going to talk about some of the hurdles to investing that you may encounter.
Yeah, and the first one, and this is a common one, people think, oh, I got to wait until I have more money to invest. And inflation has beat up everybody, and it's kind of cooled a little bit, but there's still some things, especially eggs, that cost a crazy amount of money.
No question.
No. Then you add on other things you got to do, like you got to pay debt, you got to save for a home, and you might not feel like you have ample money to put into the market. And the truth of the matter is that you don't need thousands or even hundreds extra per month to benefit from investing. You can buy $20 worth of a particular stock, or you can put $20 into a mutual fund and just get the ball rolling. It doesn't matter how much you have. It just matters that you start investing. If you make 10% and you got $20 in, that's $2 more that you have that you didn't have before. And what you really want to do is get into the habit, get into the process of investing consistently. And you can look for ways to free up money so you'll have more money to invest, ways to save money on different things that you're spending money on that might not be, let's say, adding value to your bottom line. You can reduce those costs and add that to what you're investing. Now, we always talk about the first thing you have to do is get your debt under control. Once you do that, put a little bit of money away for an emergency, and something safe. But then start investing. Start off with your workplace. Make sure you're investing at least to the company match on your workplace retirement plan. But then look for other ways to put money away in something that's going to grow and that's going to help you beat inflation.
This is another high bar to hurdle. I'm already investing for retirement. And a lot of people rest on that. Now, a workplace retirement account is definitely a great, place to start investing, but you may not want to stop there. Retirement accounts, including individual retirement accounts, IRAs, they aren't offered by your employer. Generally, they come with contribution limits as well as specific withdrawal rules. With workplace retirement accounts, your employer determines your investment choices. So you probably have long-term goals that aren't just about having a comfortable retirement. So consider, opening an investment account to fund those other priorities. There's things like HSS, we talk about health savings accounts, if you're eligible, or 529 for education expenses. If your employer doesn't offer a health savings account, you can still open one if you have a health savings account eligible high deductible health plan. It's called a HDHP, a high deductible health plan. All of these things that can help you and consider as other investments. A brokerage account is another option without contribution limits, and they offer a lot of flexibility. When I mean a brokerage account, it's like opening an account at T. Rowe Price, opening an account at Fidelity. And if you want to buy some stocks, then you can go to your broker account where it's funds sitting there and purchase some of these stocks that we'll be talking about.
Yeah. The next one, and this is a huge one. I'm worried about losing money. And if you invest, you should, but not overly worried. It's true. Investing involves risk, and there is the risk of loss. We've talked about that with crypto, and we could talk about that with stocks. Things that go bad in the market that are totally out of your control, have nothing to do with even the market. They could be political. They could be natural disasters. A lot of those things can cause your portfolio to go down. But if you don't invest, then you won't gain anything either. And when we hit a period like we've had with heavy inflation and you aren't invested, your actual purchasing power goes down. So the price of things go up, but the value that you have as far as your wealth has not changed. So you can actually buy less of what you could buy before because of inflation. And so it might seem safer to hold cash in a savings account with no risk, but you're actually going backwards. And that's not really what you want to do. You always want to move forward. And so the potential gains you can get by investing in a portfolio of stocks, a mutual fund, or an index fund, that's going to grow faster than inflation. It has in the past, even though that's no guarantee that it's going to do it in the future. But we always talk about the S&P index has averaged around between 9 and 10% over the last 70, 80 years. And so chances are it's going to continue to do that. So if you are worried about losing money, there's a couple of things you can do to reduce the risk involved. And the first is one that we talk about a lot, and that's called diversification. What that means is you invest in different pools of assets that have different risk levels and that react differently to changes in the market. And it's like I mentioned at the beginning of the show, if you have a very portfolio, the market doesn't affect everything the same way. Some things that happen in the market cause certain industries or certain regions of the world to go down. Other things cause those same things to go up. So you want to have your money spread out in different things. So overall, you have something that's going up, even if something is going down. And so it's like balancing your portfolio so you're covered in a lot of different situations. And you can diversify, as I mentioned, by region. You might want to invest in Europe. You might want to invest in Asia. You might want to invest in some of the other emerging markets. You can invest by industry classes. You can go into technical. You can go into automotive. You can go into AI. You can go into chemical companies, banking. There's a lot of different ways to diversify your money, which spreads your risk around and decreases the possibility that you'll lose money in the market.
Though I was asked the question today, or was it more of a statement? Man, this is not a good time to be investing right now with so much chaotic confusion, uncertainties right now. How do you address a person that would say this is not really a good time to be investing?
That's actually one of our points we're going to hit in a minute, Bob.
Oh,
yeah.
Okay.
We'll get to that.
Okay, good. I'm glad. I forgot that. I'm glad you reminded me of that. But that was a truthful question from a person who's really concerned. Now, it feels, this is another hurdle. It feels safer to invest in tangibles like real estate. Now, purchasing a stock may not feel as concrete as investments you can literally hold, like I talk about gold or, a house, a mortgage, or, things like that, things you can physically see and feel. While there's nothing wrong with investing in tangibles, only investing that way can be risky because, but don't say the big word, it's not diversified, and it may be harder to find a seller at that price you're looking for when you need to offload a physical asset such as your house. Now, stock markets contain all kinds of publicly traded companies out there. Every company has an incentive to do better. Like I said earlier, they're trying to do better because they're trying to make better products and sell a good product. So investing in human potential across a broad range of companies is more likely to pay off than trying to predict which individual investment is going to perform best. You can do well without having to outguess the market. Now, consider adding to your tangible assets with stocks and other assets. If you're interested in investing in real estate and gold without the storage and maintenance and consideration, research gold funds and stocks and REITs, real estate investment trusts.
Hey, Baba, another big one, and this one probably applies to everybody. I don't have time to learn everything I need to know to feel confident about my investment choices. And that's one, it's more in the older adults, mostly because you get a little more cautious as you age, and younger people think they know everything, but they don't know what they don't know. So they think what they know is everything it is to know. So this is one that hits the older people a little bit more. And there's so many demands on your time and attention that you probably don't have time to become an investing expert. And the truth is, There's nobody does. I don't even consider myself even near being an expert, but I'm always reading, always trying to learn, and just constantly trying to upgrade my knowledge. But if you don't have the time to do it, then there's a couple different options you can take. You can consider working with a financial advisor to guide you. Some of them may charge based on a specific giving you a portfolio, or they might charge a percentage of your assets, or they may help you define your goals. There's a lot of things they can do to help you, but a lot of times that's for a fee. But there's also a lot of information in some of these brokerage firms. For example, Fidelity, you can go out and learn about anything you want to learn about on their website. They offer all sorts of knowledge about all the different aspects of investing. And it's just a matter of you taking time to do that. You can have a managed account, which is what I have with my professional. They pretty much manage, they pick what they buy, and I pay them a percentage of my assets. Every quarter, they get a check for having managed my account. They rebalance it. They keep me abreast of what's going on and what they're doing. They understand my risk tolerance and how much risk I'm willing to take. Another option is robo-advisors, and they're becoming very popular, especially with the younger generation. And those are just managed accounts that use digital engagement to automate investing. Fidelity has one, and theirs is kind of neat because you can put money in there and you don't even have to pay a fee until your fund reaches $25,000. And so that's one you might want to consider. And they give you access to a team of coaches who can walk through your finances with you. They rebalance, they take care of everything, and it's all computer generated. And I gotta throw this out that there's no empirical evidence that says a financial advisor does better than, let's say, the S&P 500. As a matter of fact, if you have a financial advisor, you should compare the results you get with them with the S&P 500 index, because if they're not doing any better than the S&P index, then you should just simply invest your money into an index, which is the final choice of just invest in a built-in diversified product such as a mutual fund or exchange trade EFT, exchange traded fund, in which case your money is invested into a basket of goods. If it's the S&P index, its results are going to exactly mirror what the S&P index does. You can also get funds that are technology-based or AI-based or gold or commodities. You can invest in any type of mutual fund and everything is handled right then. You can also get something called a target date fund. And that's a type of mutual fund where the mix of stocks, bonds, and short-term investments are geared toward giving you a certain amount of money at a specific time. For example, if you're 30 years old and invest in a target date fund that says for your retirement at 65, that fund's going to be very aggressive, and it's going to invest in a lot of things that are high risk, high reward, with the goal being to have X amount of money when you turn 65, or if you're doing it to say for a kid go to college, when that kid turns 18, you should have a lot of money at that particular time. So there's a million ways to invest without having to learn everything, but you just have to find the one that you're most comfortable with, that gives you confidence that it's doing what you want it to do as far as investing, and it takes into account the level of risk you're willing to accept.
That's good advice.
Now you get to answer your question.
I don't know the exact right time to start. Was that the question?
It was like people saying that it's now a good time to invest.
Right. Thank you very much. Thank you very much. So timing the market is very difficult, and it's almost impossible because even the greatest financial advisors and institutional financial institutions, they don't have a corner on and really know what's going on. Rather than waiting for the best time to invest, it can often be a better idea to just get invested. And as me and Doug always talk about, be consistent, like stay invested, be consistent. Now, we always talk about this, but it doesn't hurt to repeat it. Dollar cost averaging is one particular investing strategy that takes the guesswork out of when you're investing. Now, this is when you invest in a specific amount at regular intervals, like $250 a month or a set percentage from every paycheck. No matter what the market is doing, you end up buying more shares when prices are relatively lower and fewer when prices are higher. But it's definitely a strategy, and you can't time the market. We talk about that all the time. But the way to really get the best out of the market is by being consistently in the market and investing.
Yeah, and the next one, this one hits a lot of people who just kind of throw their hands up in the air and say, I'm so far behind, it ain't worth it. And for a lot of people, it seems like a lost cause, and you're not going to be motivated to do it. But it's never too late to start. And it doesn't matter when you start. It's nice to get that ball going and start making more money. Okay. Thinking about your future, whether that future is 5 years, 10 years, 15 years, or whatever it is. And if you think about, this is the example Sue Zorman always gives. If you contribute $7,000 a year to an IRA, starting at age 25, you'd have over $2 million by age 70. But if you wait until 35 to start making those same contributions, you could still amass over $1 million. If you can't start till you're 45, you would only have about 500,000. So all that says is the sooner you start, the more money you have to potentially grow. Not starting means not giving your money a chance to grow at all.
And this next one almost seems like it's tied to what Doe said. It's better to wait until I have more money. Where actually this one is saying, this one is saying, I don't have enough money to invest. Now, when it comes to investing for your family's future, there is no minimum. The first and most important step toward investing is savings. Saving is human nature to procrastinate. We know that. But half the battle is just getting started. This can mean paying yourself first by directing a small percentage of each paycheck into savings. Putting money aside regularly becomes a feel-good habit. Like it's almost like exercising. You can witness your own incremental progress and boost your self-esteem if you just take some basic measures. You'll be surprised by how easy it is to set this emotion, and you'll feel good for yourself and your family. Just look at these numbers. If you invest $100 a day and then $100 per month for 30 years with a 10% return, which is doable, you'll end up with almost $200,000.
Yeah, and another one, and this is for the skeptical bunch. It takes too long to see results. Like some people invest and they want to see the money double in like a week. Well, how come it ain't going up? Well, you got to have patience. You got to wait for gains. Sometimes things go down before they go up. It's a long-term game. We always talk about that. And like many good things, it can require patience. But if you're looking for something to keep you going, then consider a dividend stock where you get money every quarter. And again, I mentioned why I bought Pfizer. Pfizer pays about a 6% dividend every year. Okay. Now that's no guarantee they're going to continue, but they have in the past. And so if the stock doesn't go up 1 point, I'll still make 6% every year just by the dividend. Okay. So look for CDs, which also have the same. It's going to pay you a certain amount over a certain amount of time. Same with bonds, which pay out at set interest rates. Those are the kind of things that, again, you don't want to make that all of your portfolio, but it should have a place in your portfolio just so you can see some of those positive things to keep your motivation and keep you psyched up about investing.
When it comes to investment advice, a lot of people say, I don't know who I'm supposed to trust. Now, this is a big one, though, because there's so much misinformation, so many people. I remember Uncle Leroy would be down at the family cookout and be telling people how to invest, and this money be broke. But here's the good news. You don't have to trust anyone. Just trust the market. No human being can tell you more than the market has already told you through setting prices. With the prices, you look at it and see how the prices are going. Markets are always reacting to new information in real time. Now, remember this. Anything you hear a pundit say on TV or read on the internet message board is yesterday's news. And it may seem obvious, but you have to remember there's a difference between fact and opinion. So cultivate a healthy sense of skepticism when it comes to, financial pundits and out there giving you information. And remember that it's not news, but entertainment. And if you need a trustworthy sounding board, consider meeting with an independent, qualified financial investor. No, I say qualified because if they're qualified, they have a license and they have a fiduciary responsibility with your money. And then don't just get one. Get one whose interest is aligned with your own.
But what does fiduciary mean again?
Fiduciary is when you give a person the responsibility to be able to manage your affairs on your behalf.
Yeah, they're looking out what's best for you.
Right, and there's a license for that, and that's why if you deal with most financial advisors, you should make sure that they are licensed financial advisors. That's what qualified financial advisor means.
Okay, and finally, the bottom line on this whole thing, any decision you make with your money, even not investing, is an investment decision, whether you realize it or not, and that involves risk or reward. You're focused on the risk involved in investing, but what are you risking by not investing? You're risking today's money having less value in the future because of inflation. You're missing out on the magic of compounding, which Albert Einstein is said to have described as the eighth wonder of the world. And as we talked about with the rule of 72s, if you average 10%, your money's going to double every 7 years. That's the magic of investing. You're forgetting that diversification spreads your investments across a large number of companies. That's a powerful way to minimize risk. So when it comes to personal goals, everything has a trade-off. And most people don't have enough money saved to be able to live adequately in retirement without earning some kind of investment return. So by not investing, you risk outliving your money.
So please take note of that. Rodney Madison Sr., the note experienced professor, he said it's a perfect segment for diversity in mortgage note investing. We must have Rodney on. We're going to do that soon, very soon, Rodney, so you can talk more about what is mortgage note investing. And he says it's which is secured by real property, and for someone who also wants passive cash flow. And I like that. Not only do you have an asset, but you also generate passive income. So Rodney, I promise you we're going to have you on so you can talk more further about that.
And Bob, just a point, passive income, that's making money and not doing nothing. Ain't nothing better than wake up and got more money than you had the day before and you didn't do anything. That's what passive income is.
And compensation is you're working for your money. You had to do something. There's a big difference, and we want to get you to passive income, where you don't have to work that much. You can just close your eyes and your money's working for you. Me and Dote are big proponents on that. So with that, Dope, let's go to the video. Let's bring it on home, Dope. So, summary of today's um, hurdles to investing. The best time to invest is now. My father used to call all 7 of us. He would start with Steve, Linda, Gloria, Arthur, Nolia, Bobby. I want you here now, not after a while, not later, but now. So, best time to invest, y'all, is definitely right now. There's no right or wrong time or best time.
Yeah, financial planning reduces risk. And that's understanding, reduces fear, I'm sorry. And that's understanding your risk, diversifying, having a plan to address what's going on in the market. And that's going to not eliminate fear, but it's going to reduce the fear of losing money.
Next one is financial literacy is important. What's the saying? I've ever know a lot about a little bit, or did, as opposed to a little bit about a lot. So I had it backwards. I've ever know a little bit about a lot than a lot about a little bit. In other words,
Yeah, I think you got that totally jacked up.
I sort of jacked that up, didn't I? But y'all got what I'm saying. Something they go food. It's about learning, going out and learning more. Like we said earlier, you don't have to know everything about investing, but if you just know the basics, it's really simple, but you just need to make sure you have the understanding of the basic principles and go at it. But you must take the effort. You must put in the time and you must put in the work. And that calls for it's so many books out there now to read. So make sure you educate yourself and it'll be beneficial in the long run.
And finally, this one's kind of very, very important. Investing requires patience. Once you've done the work, once you understand what you're doing, you can't expect your value to grow 20% over the next month or maybe the next year. Things happen in the market. The market goes up, the market goes down. You have financial catastrophes that happen. You have environmental, you have natural disasters, you have wars, you have presidential elections. All those things affect the market, and it can cause it to go up or it can cause it to go down. All we can tell you is over the long haul, the S&P has averaged 10% a year, and there's no reason to think anything else is going to happen. So you invest with the idea that over the long term, you're going to be better off than you would have been had you not invested.
Modestine, who lost money on the Super Bowl? Donald Trump. So look,
I hope nobody. That's another way of losing money is gambling. I hope none of our listeners spend a lot of time gambling, because that's a good way to throw away money.
I learned off. Let me tell you something though. When it comes to gambling, let me tell you my luck with gambling. I scratch off one of the scratch pads one day. It said I owed $2. So don't get caught up, y'all. So roll call. I'd like to thank everybody for being on. Modestine down there in Lexington, Kentucky. Gloria, Nolia, Linda. It sounds like my daddy Lawrence, don't y'all? I know y'all like that when I told about daddy Lawrence. Not now, not after, not later, but now. Judges all are on here. Thank you. Rodney L. Madison Sr., TheNoteExperience.com. Go check them out. Now, Dodie Holler doing the wonderful, wonderful queen. What's up? Joanne Skinner, like I'm talking about, you know what, Joanne Skinner? Now I know why your name rhymes with a winner. Because Joanne Skinner is definitely the winner. She's been on here for the longest. And what's up, Dee? Deborah Doty in the house, y'all, with furniture and a jacuzzi. What's up, Deborah? Glad you could join us. Thank you so much. Dope, the quote of the day.
Oh, you're forgetting one thing.
Nope, I ain't forgot it.
Okay.
I got it. I'm saving the best for last. But the quote of the day is, you can walk way further in a day than you can run.
I got to think about that one, my brother.
It's about a whole show. Don't try to be patient. You can walk way further in a day than you can run. Take your time.
Okay. I got you.
Stick with me. I'll help you out, though.
I got you. Thanks, bro.
Damn, I was on a roll there until the day. Damn, I had you, though. So we're going to end with this, you all. Happy birthday to you. Happy birthday. Today is Linda's birthday, y'all. And guess how old she is?
No, they don't tell nobody's age.
Hey, what happened? Look, no, she already told me. Both of them. We met today with lunch with Linda, and all three of them like, don't you be telling her age. Don't you be telling her. First thing, don't you be telling her. Happy birthday, Linda. And I'm going to tell you age. I know she's like, I know she's over to curse me like I'm a good Christian woman. Look, y'all, thank y'all for tuning in. Love you, Linda. Happy birthday. You're a young woman. Yes, you are. So look, everybody, happy Valentine's Day, too, to everybody. Tomorrow, happy Valentine's Day. Love is in the air. See you next week. Same bat channel, same bat place. Comments, Doty, Bobby Kinzer, signing off.
Peace.
Peace.